Welcome, dear traders. We are watching a recap of the Asian session. Yesterday, stocks rose, closing out at their best January since 2019. Australian stocks spiked to their 9-month highs following a sharp increase on Wall Street. New Zealand stocks managed to hit a 10-month highs, and the Japanese equities also kicked off February with a moderate growth. A rise in the Asian stock indexes occurred amid expectations of a less aggressive monetary tightening by the Fed. According to the CME FEDWATCH tool, more than 98% of speculators are betting on a 25 basis point rate hike. The main reason for dovish expectations is a slowing inflation. For example, the headline PCE price index slowed for the fourth month in a row in December, dropping to an early low of 4.4%. Another indicator tracked by the regulator is home prices. The report published yesterday showed that home prices in November grew at a slower pace. Wage growth was also been declining for the third time in a row. After an increase of 1.2% in the third quarter, the indicator sank to 1% by the end of 2022. However, such figures may also signal the start of a recession. Investors seem to have shrugged off these fears and turned their attention to earnings reports of the largest US companies for the last quarter of 2022. Optimism on Wall Street significantly affected government bond yields and the US dollar. Today, the Fed will announce its rate decision. The US dollar index was rather volatile, moving in the range of 102 and 102.20. Sharp price fluctuations in a very narrow corridor clearly indicate a mixed market sentiment. Yesterday, the greenback fell to 102 due to weak data on wage growth and home prices. In the Asian session, the US dollar index was trading at 102.10 against its main rivals. Its consolidation will last until the Fed's rate decision. The regulator will announce in 2 hours before the end of the US session. The dollar-yen pair is also hesitant to the pick-up trajectory. As the traders are cautious ahead of the Fed meeting, the pair looks weak. Its growth is not as impressive as it was on Monday and even Tuesday. Back then, the bullish sentiment was stronger. At the start of the week, the media reported that Yuri Akina, the chairman of the Japan Research Institute, could become the first female deputy governor in the Bank of Japan history. She is the vocal opponent on the ultra-soft monetary policy, and the yen climbed amid the likelihood of her appointment. In its economic outlook for 2023, the International Monetary Fund called Japan the largest industrial manufacturer. Japan's real GDP growth is projected at 1.8%, which is far ahead of other countries. Yet the yen failed to retain an upward movement. Its trajectory will largely depend on the Fed's rate decision. Besides, it's sensitive to the US Treasuries, which are now growing. And after a pullback from the weekly high, the yen is hovering near 130 yen. It's trading in the range of 129.80 and 130.40. However, after the Fed meeting, dollar bulls may take advantage. In the morning, they pushed the PM to 130.30. Overall, the sentiment is moderately bearish, with 57% of traders of 43% expecting the yen to climb. If so, yen bulls may quickly return to the price to the support level of 129.50, and in this case, the downtrend will prevail. The Australian dollar, which usually rises along with Wall Street's, has advanced today as well. It also gained momentum thanks to data from China. The manufacturing PMI index in January climbed markedly and exceeded forecasts. Oil prices moved up as well amid the recovery of the Chinese economy, and this is another bullish factor for the commodity currencies. So in the Asian session, the Aussie kept climbing. It reached 0.7083. And in Australia, the consumer price index jumped to 7.8% in December. It means that inflation has not perked yet. Nevertheless, analysts do not expect the Reserve Bank of Australia to change its stance. The futures market shows that traders are counting on a 25 basis point rate hike. Therefore, the main driving force for the pair remains the greenback and its movement after the Fed meeting. So the pair started the day with a moderate increase in the range of 0.7036 and 0.7086. In New Zealand, inflation has already passed its peak. In addition, the labor market also remains stable. The unemployment rate amounted here to 3.3%. It reinforced expectations that the Reserve Bank of New Zealand could raise the key rate less aggressively later this month. And the upward movement of the New Zealand dollar is somewhat limited today because of these prospects. However, in the morning it advanced to meet the same drivers as the Aussie did. The NZD USD pair was moving in the price corridor of 0.6417 and 0.6452, and it was trading at 0.6450. And that's all for now. Leave your comment down below and don't miss our next video review. See you soon!